Good morning and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you live from the 34th Annual Futures and Options Expo in Chicago. Joining me for this segment, we have John Davidson. He's the President and Chief Operating Officer of the Options Clearing Corp with a regulatory update in the options industry. John, it's great to see you again. As always, now you've had some recent success with regulatory approvals, one of them with your financial safeguards framework. Can you explain why that's important for the options market?
Sure. Well, the financial safeguards market is all about the clearing fund of the OCC, which is the mutualization of risk from all of the clearing members. We have modified it for a couple of ways. First of all, a much more sophisticated manner of determining how large it needs to be based on stress testing rather than a fairly inflexible previous model. Also, we are able to say that we have so-called cover 2 in our clearing fund, which is very important for European regulatory approvals. Cover 2 means we have enough resources in hand to cover a default of the two largest clearing members at OCC. Obviously something we don't think will ever happen, but we have to be ready. Well,
I'm sure it was tested last week with the volatility that we saw. How did the new methodology perform?
It performed quite well, actually, and we recently made some other changes to our margin methodology, and the two of them performed very well hand in hand. So I think the clearing members are quite happy with the changes that have been made.
Well, based on what OCC does for the industry, you must be resilient with everything that you do. What else has OCC done this year to enhance its resiliency?
Well, we have resiliency requirements in two areas. Probably the most challenging area actually is with respect to operational risk. So we have to be volume insensitive, and notwithstanding a 20-year-old technology, we are very volume insensitive. We've spent a lot of resources improving our ability to prevent cyber attacks on our infrastructure in coordination with the other financial markets and information systems. And we are continuing to work on upgrading our technology.
Right. And we talk about technology every time that I meet with you. What are some of the updates to the Encore platform?
So we are basically looking at replacing this 20-year-old technology. We are separately developing a risk system which is not integrated with Encore clearing processing the way the old system was. That gives us a lot more flexibility to manage risk, particularly on an intraday basis. We're looking at a couple of vendors to see about having them assist us in the replacement of this 20-year-old system. We're completely changing our data infrastructure, moving to the so-called public cloud over time. And then, of course, we have to keep Encore going. Until we replace it, it has to operate every single business day with a high level of resiliency and a high level of capacity.
It's interesting. Key theme at FIA has been moving a lot of data and content to the cloud. What will you be focusing on for 2019?
For 2019, we're going to continue, obviously, with these very high priority technology projects. We have a number of regulatory remediations to complete. We've moved a huge distance down that path in 2018. And of course, we have to continue to provide innovation to the exchanges that we support, including, of course, Nasdaq, as well as the securities lending market. So those are our key areas of focus.
All right, John, great to see you as always. Thank
Likewise.
You for joining me.
Thank you very much.
And thank you for joining me throughout the day at FIA. I'm Jill Malandrino, Global